Ladies and gentlemen, good day and welcome to the Q4 FY26 earnings conference call of Emcure Pharmaceuticals Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Saurabh Paliwal. Thank you and over to you, sir.
Thank you. Good afternoon, everyone, and welcome to the Q4 FY26 earnings conference call for Emcure Pharmaceuticals. Thank you for joining us today. I am Saurabh Paliwal, and we'll begin today with brief opening remarks from the management and then open the line for Q&A after the commentary concludes. Joining me today on the call are Mr. Satish Mehta, Managing Director and CEO, Mr. Taj Shaikh, Chief Financial Officer, Mr. Samit Mehta, Whole-Time Director, Mr. Vik Thapar, President, Corporate Development and Strategy and Finance, and Mr. Piyush Nahar, Executive Vice President, Corporate Development and Strategy. We hope you have had an opportunity to review the financial results, the results presentation, and the press release that were released earlier. Before we start, I would like to remind everyone that this call is being recorded. I also need to remind everyone about the safe harbor linked to today's call. Certain statements made during the call may be forward-looking in nature. These statements are based on our current expectations, assumptions, and management's view as of today. Actual results may differ materially due to a range of factors, including market conditions, regulatory developments, competitive dynamics, operational factors, and other risks and uncertainties. For additional details, please refer to our earnings presentation and press release. I'll now hand over the call to Mr. Mehta to begin his opening remarks. Over to you, Mr. Mehta.
Thank you, Saurabh, and good afternoon, all of you. Or bade dil se, I would like to thank you for joining us to review Emcure's Q4 and FY26 results. It means a lot that you have found time to join me. FY26 marked the start of our 5-year strategy, focusing on turning last year's operational changes into measurable outcomes. I am very happy to tell my investors that we crossed a major milestone this year, surpassing $1 billion in revenue and having a growth of 16.6% year-on-year increase, exceeding the guidance that we had given to you. We also increased our base business EBITDA margins by over 100 basis points, and our adjusted PAT grew more than 40%. I repeat, our adjusted PAT grew more than 40%. These outstanding results give us confidence that the investments we are making in our people are very important, our processes, and I always keep telling, whenever I have been on the call, that we take pride in telling everyone that Emcure has been built on science, technology, and innovation, and technology, including the adoption of AI across key functions, are obviously starting to deliver. I'm very happy to say that. Turning to key strategic highlights from the year, let me now focus on portfolio expansion. That's the first thing I would like to take up. We strengthened our portfolio in core markets through in-licensing, M&A, and internal R&D. I would now like to highlight 3 notable partnerships that we had in the year that has ended. I'm focusing on in-licensing to begin with. The first partnership that we had with Novo Nordisk, we also spoke last time, and very happy to inform my investors that Emcure was selected as the exclusive India partner for Poviztra, a patented rDNA biologic semaglutide. Rest of the products that we are seeing in the market are synthetic. This is rDNA biologic semaglutide, which I would like to emphasize. Strong exclusive global data and established device distinguishes Poviztra from the generics which have been introduced. The initial uptake has been promising, especially after the price cut in April 2026. And I must say, the pricing, which has been done is very competitive, and we obviously have a story and strategy. We aim for steady growth through FY27. After Novo Nordisk, the second in-licensing that I would like to focus on is Sanofi. We expanded our partnership to include their oral anti-diabetic brands, Amaryl and Cetapin, boosting our position in cardiac and metabolic therapies. With this, Emcure is amongst the leading cardiac players, and thanks to Amaryl and Cetapin, we also have now a reasonably good, strong foothold in the metabolic space as well. The third partnership which has happened, and we virtually started billing, from 1st of April, we signed a distribution agreement for select nephrology and transplant medication in India, which has widened our offerings in the therapy. It will not be out of place to mention that we have a reasonably strong position in the field of nephrology. We are one of the top 5 companies, and to that extent, this portfolio will obviously help us to augment our position in the field of nephrology going forward. These alliances with leading pharmaceutical companies demonstrate our strong commercial capabilities and scale in the India market. India market means a lot to us. Now, after having spoken about in-licensing, I would now talk about M&A and portfolio consolidation. As far as Zuventus is concerned, we completed minority stake buyout for full consolidation and expect operational synergies to play out over a period of time. Globally, we acquired the Manx portfolio in the UK to grow our UK business and European business as well. And QTmed we recently acquired in Canada, enhancing our derma range along with Emcure. Let me now focus on our R&D and pipeline updates. I spoke about in-licensing, I spoke about M&A and portfolio consolidation. Now let me turn on what has been happening in our R&D and pipeline, and which we take a lot of pride. Amphotericin B remains a key near-term focus. We launched in select European markets in H2 FY26 and intend expanding to Europe and rest of the world markets in FY27. For bevacizumab, ophthalmic biosimilar for wet AMD, we received endorsement from CDSCO Subject Expert Committee, and we plan to launch in H1 FY27 pending approval. The third important thing is in the field of HIV, where my company enjoys a pole position. We are one of the 6 global voluntary licensees for Gilead lenacapavir. We have filed DMF and expect to seek product registration in FY27. Our scientific advisory committee is shaping our long-term pipeline in 4 areas. Let me focus on these 4 areas. One is complex injectables. Second is biosimilars. Third is new delivery routes for existing drugs. And something which we have been talking for last couple of calls as well is antibody drug conjugates. Now, having focused on in-licensing, merger and acquisition, portfolio consolidation, and having given you some flavor about R&D and our pipeline updates, let me now turn my attention to business performance. As far as the year which has just ended, FY26, we grew by 16.6% to 9,204 crores, 9,204 crores, with a resilient domestic performance and strong international performance. Now let me focus, as far as business performance is concerned, to focus on domestic business, which is very close to my heart. Domestic business grew by 10% in FY26 to 4,027 crores, 4,027 crores, led by women health, cardiac, CNS, and oncology. I mean, as far as Q4 is concerned, yes, I will admit, first person to admit it was softer, mainly due to Zuventus portfolio and team reorganization causing higher attrition. As you know that we acquired the minority stake in Zuventus, so there was attrition, but integration and new leadership hires have addressed these issues, and I'm very happy to say that as far as April is concerned, it's absolutely as per the plan. It is on track, so nothing to really worry as far as Juventus is concerned going forward. New therapy areas about which we spoke last time as well, derma, aesthetics, consumer health, diabetes are scaling well. Povista Novo Nordisk partnership shows promising early uptake, especially after the price, price. So we are in soft spot, as far as the pricing is concerned, and we do expect reasonable growth in FY27. I'm very happy to inform that as far as the field productivity is concerned, it has gone up from 5.4 lakhs per medical representative to 7 lakh per person over a period of last 2 years. So obviously good things are happening. As far as international markets are concerned, I am very happy to inform that revenue grew by 22% to 5,177 crores in FY26, 5,177 crores in FY26. Strong baseline business growth and successful launches with Max integration. Canada posted solid growth on market share gains and new launches. Rest of the world deliver healthy growth across non-ARV and ARV, with non-ARV supporting revenue diversification and ARV maintaining a strong order book. I think, as you know, the non-ARV business is very important, and that's a function of the registration that we get in the various markets. So we got reasonably good, registrations. So we are very bullish as far as the international markets are concerned going forward. EBITDA margins improved year on year due to operating leverage across both domestic and international markets. Now, having talked about, the year which has ended, now let me focus on outlook and growth levers, as far as FY27 is concerned. That's what I would like to focus, having spoken about the business, for the year which has just ended. I talked about the first year of our strategic plan, where we have delivered the results, and we have been focusing on execution about whatever we decided in the beginning of the year. And now, as far as the second year of our strategic plan is concerned, I am very happy to inform my investors, and your presence means a lot to me, that Emcure is very well positioned for strong performance going forward. Our growth drivers at different stages. The first growth drivers is obviously going to be a domestic market. I'm very happy to say that we have a very strong team and portfolio which will drive better than industry growth ahead, especially in cardio, diabetes, biologics, women health, and new initiatives. I've been leading this domestic initiative for the last 30 years, and I feel good about the team, which we have built up in last few months, and I feel good about the domestic market going forward. Then the second lever of growth will be semaglutide partnership. Then Emcure, the derma product, that we have launched. And of course, the consumer business Earth, which is showing, good uptake. It's stabilizing reasonably well, are in initial stages of scale-up, and we expect returns from this to build over a period of next few years. And all these areas, are growing areas, like as far as derma is concerned, that's a growing market of 14,000 crores. And there, because of the strategic initiatives that we are taking, we are bullish, and Earth, of course, we are doing well under leadership of Namita. Then Canada and Europe, we expect growth to continue, led by market share gains, new launches, and expanded portfolio. Canada and Europe will continue to grow. The fourth lever is amphotericin B, and we expect in the current year, amphotericin B should make significant contribution in FY27 on the back of registrations that we are receiving from different geographies, both regulated as well as emerging markets. So in the rest of the world markets, we expect sustained growth led by non-ARV pipeline and robust ARV order book. FY27, we project low to mid-teen revenue growth, and as I have been explaining in last meet and a few calls that I have had the privilege of addressing to you guys, that EBITDA margin expansion will happen as committed between 75 to 100 basis points going forward, assuming stable regulations and macroeconomic conditions. I think this is based on the assumptions that there will not be a major upheaval or problems at the geopolitical level. So I think, overall, we are quite optimistic and bullish about the business as for the second year of the execution of the plan is concerned. In closing, I would like to tell my investors that our strong performance highlights our diversified business model, India-led manufacturing, scientific strengths, focus on science, innovation, technology, and more than anything else, one area on which we are hugely focused is on execution. Because that's one area where we will distinguish we'll make a distinction when you compare, or distinguish ourselves when we compare with other companies. The focus will be on execution going forward. Our priorities are clear, and priorities are absolutely well defined. Achieve sustainable above industry growth, very important, both in domestic and other markets. The second area, as far as execution is going to play a very important role, is to expand margins. That is very important going forward. Get the synergies on account of the scaling of the business that is happening, and create long-term value for my stakeholders. It's very, very important that my stakeholders is at the core of the strategies that we'll be formulating, and I'm extremely conscious of the fact that you have reposed faith in me and my company to that extent that will always remain at the back of my mind as we execute our policies going forward. Again, I would like to reiterate that Emcure science-driven portfolio and record delivering complex products set us apart. We are different because we are focusing on technology. So our complex products will set us apart. Our ongoing investments will be in people, products, processes, and partnership position, and partnerships that we have position us for growth and profitability across all geographies, as in India, Canada, Europe, and rest of the world, as we progress through our strategic plan. So I think, as far as going forward is concerned, the focus will be on growth, and obviously, improving the margins. That's something that we have, and that's how we will go. Now, I would also like to thank you all and all my Emcurians for all unstinted support they have given us, and we are very proud of that. And I would also like to thank all of our shareholders for reposing faith in us, and partners for their absolutely unstinted support, which means a lot to me as an individual at this point of time in my career, and that's the biggest capital that I have, and I intend building on it for my shareholders and my partners going forward to deliver results, better results year after year. Thank you for giving me patient hearing. Your support means a lot to us, all of us. Now I will hand over to Taj, our CFO, to review the Q4 and FY26 financial. Taj, over to you.
Good afternoon, everyone. I will take you through the key financial highlights for the fourth quarter and the full year FY26. I will be discussing all comparison on a year-on-year basis. Starting with the Q4 performance, revenue from operations for the quarter grew by 16.7% to 2,470 crores, up by 16.7%. The domestic business grew by 5.2% to 977 crores due to softness in Zuventus arising from the recently concluded minority stake transaction and related leadership changes and team and portfolio reorganization. International markets maintained their strong growth momentum, with revenues growing 25.7% to 1,493 crores. Europe reported revenues of 538 crores, a growth of 35.8%, with base business, Manx and Amphotericin B scaling up being contributing factors. Canada reported a 28.6% growth, with revenues increasing to 399 crores, led by market share gains and new launches. Emerging markets grew 15.5% to 556 crores, with both ARV and non-ARV seeing strong growth. Gross margins for the quarter stood at 59.4% versus 57.8% in quarter 4 of FY25, up 160 bips because of a better business mix, especially new launches in international markets. EBITDA, excluding other income, grew 24.5% to 485 crores. EBITDA margins improved to 19.7% from 18.4% in Q4 of FY25 and 19.5% in Q3 of FY26, supported by operating leverage and productivity gains, being partly offset by Sanofi OAD contribution. Depreciation and amortization for the quarter was 106 crores. Interest cost was 46 crores. During the quarter, we also booked an exceptional expense of 43 crores related to Mantra earnout being higher than initial expectation due to better performance achieved. This was partly offset by reversal of 12 crores due to reassessment of new labor code related liabilities. Excluding the impact of exceptions, the effective tax rate stood at 25.4% for the quarter. Consequently, reported PAT for the quarter was 244 crores with a PAT margin of 9.9%. Adjusted PAT came at 279 crores, showing strong growth of 36% year over year with PAT margin of 11.3%, which was up 160 bps. Net debt as of 31st March 2026 stood at 1,054 crores. The increase in debt over the last year has primarily been because of payout for Manx as well as Zuventus minority stake acquisition. Moving to the annual performance for FY26, revenue from operations grew to 9,204 crores, a strong growth of 16.6%. Domestic business grew to 4,027 crores, representing a growth of 10%. International markets performed well with revenues growing 22.2% to 5,177 crores, driven by strong performance across EU, ROW markets and Canada. EU was the strongest performer with revenues growing 25.5% to 1,850 crores. ROW markets scaled up to 1,840 crores, delivering a 21.8% growth. Both ARV and non-ARV verticals contributed to the strong performance. Canada grew 18.7% to 1,487 crores through base business growth and new launches. Gross margins for FY26 stood at 60.3%, up 20 bps. EBITDA for the year was at 1,789 crores, growing 21.8% from 1,469 crores in FY25. EBITDA margins improved 80 bps to 19.4%, reflecting improved utilization and productivity gains. The EBITDA margin improvement is despite increase in R&D investments during the year. R&D investments stood at 383.5 crores for FY26, corresponding to 4.2% of revenue. This was an increase of 50 bps year over year. Depreciation and amortization grew to 415 crores from 384 crores in FY25. Excluding exceptional and one-time impact, our effective tax rate for FY26 was 26%. Reported PAT was 941 crores with PAT margin of 10.2%. PAT adjusted for exceptions was 1,008 crores, reflecting a growth of 41%. Adjusted PAT margin stood at 10.9%, up by 189 bps. With that, I will now open the floor for questions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and then 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and then 2. Participants, you are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder to all, you may press star and then 1 on your touchtone telephone to ask a question. We will take the first question from the line of Amey Chalke from JM Financial. Please go ahead.
Yeah, thank you so much for giving me an opportunity and congrats to the management on a good set of numbers. So the first question I have on India business, we have delivered around 5% growth this quarter. I understand if there was a Juventus impact. Is it possible to quantify this impact, and does it mean that since there is a attrition and all what you mentioned, the next few quarters year-on-year growth could be affected on account of this restructuring?
Sure. Thanks, Amit. So I think just to give the context, right? As you know, we took over the Juventus in end of Q2, early Q3. We had got a new management team, and I think Q4 is when we did the restructuring of the whole team and portfolio out there. So most of the slow growth that you are seeing is because of that. I think X of the Juventus impact for the full year, we would have been close to the 9-10% base business growth that we have been talking about, that we delivered even in the first 9 months. So majority of the decline that you're seeing in Q4 was led by Juventus. I think the restructuring was a mix of portfolio restructuring, team refocus, and which led to a higher attrition. We don't think the impact lasts for the full year. For the FY27, what we do expect is we continue to growing above industry. And as the CEO had mentioned even in his opening statement, April we are now recovering back on track.
Hello.
Yeah, go ahead.
I think we lost him. I don't know.
Due to no response from the current participant, we will take the next question. We have the next question from the line of Tushar Manudhane. Please go ahead.
Thanks for the opportunity. Am I audible?
Yes, you are.
Yes.
So as far as the international market is concerned, if you could just share how much would have been the constant currency growth for each of the segments, Europe, Canada, emerging market. That's my first question for the quarter.
Sure. So I think overall for the international market, the currency impact was about at 7 to 8% that we had. So it was slightly higher, more about closer to 11-12% in Europe, while Canada and emergings was slightly lower.
Got it. So then considering even if I let's say constant currency growth of Europe to the tune of almost 22% for the quarter, and then we have niche product scale up that's happening in Europe. So what kind of outlook one can think for next 2 years, 27, 28?
Sorry, Tushar, when you're talking about the overall international markets or?
No, I was referring particularly for Europe, like even adjusting for the constant currency, the growth has been great with a good scale up in certain niche products. So just was trying to understand the outlook for 27, 28 for Europe market.
Yeah. So I think in the near term, the growth, we do expect it to be stronger in Europe, especially as Amcure gets launched up. But yeah, once it reaches the scale, so I think over the next 2 years, we do still expect mid-teens of growth in the Europe business as a CAGR.
And that should help to get better gross margins as well. At least for Q4, it is not getting reflected compared to Q3, despite improvement in the overall international business process.
So I think so if you look at it among the business itself, right, usually domestic is a higher GC business versus international. Now, if you look at it, despite the domestic being slightly softer in Q4, our overall GC has improved Q on Q. So some of that is reflecting out. I think for the full year, we do expect the GCs to remain around that 60% point. So.
Understood. And just lastly on the domestic branded play, what kind of industry growth we think would be there for, say, FY27?
I think we continue to expect industry growth to be around that 8 to 9% odd. And for us, the target, as we said, the target for us is to grow faster than the industry out. So at your low double digits.
Understood. Thanks. That's it.
Thank you. We will take the next follow-up question from the line of Amey Chalke from JM Financial. Please go ahead.
Yeah. Am I audible now?
Yes, sir.
Yeah, you're audible.
Yeah, thank you so much. I just have one follow-up question on Zuventus. So what kind of operational synergies do you expect in Zuventus? Like, will it improve our India margins? Are you going to consolidate our like a common molecule brands which are present in both the entities? Or the MR field force, are you going to cut it down so that could improve the profitability? Any color on that would be helpful.
So basically, let me tell you that as far as we are concerned, Juventus is a different segment altogether. Just to give you a flavor, as far as Emcure is concerned, essentially focuses on gynec, cardio, and metabolic. So that's what we do as far as Emcure.
Sorry to interrupt, sir. If you're speaking, you're not audible. Hello? Sir, you're not audible.
I think we lost. I think we lost the CEO. Can you guys hear me? This is Vic.
Yes, I can hear you, sir.
Yeah, I'll try and take a stab until Satish is able to join back in. I think the synergies are going to be more in terms of how we're organized on the sales and marketing efforts. I think what Satish was trying to highlight that given these two segments still cater to very different therapeutic segments, on the manufacturing synergies, it's less because we have plants that are catering to, specific sets of products on both sides. But definitely on some of the sales and marketing and related support functions, that's exactly some of the restructuring efforts that are underway to be able to synergize and get some operating leverage in the sales and marketing aspects of the Zuventus business.
Amay, does that answer your question? Ladies and gentlemen, the line for the management has been disconnected. Please stay connected while we join them back. Ladies and gentlemen, the line for the management has been connected. We will take the next participant. We have the next question from the line of Bansi from JP Morgan. Please go ahead.
Yeah, thanks. So just two questions from my side. Firstly, on India, if you can just help us understand slightly more in detail as to how the acquisition of minority stake, affected the Zuventus portfolio and the attrition. The second, part to it is that, of our total MR count, what percentage of field force is for Zuventus and, what is the kind of restructuring we saw there?
Sure. So I think what happened along with the minority stake, what we also had was the management, big change in the management team, right? So Mr. Gua was leading that business since the inception. He stepped down and we had a new team coming in. And I think when the new management came in, we also had a relook at the whole portfolio, the team structure that we had. I think something similar to what we did in the cardio diabeto when we took over the Sanofi, where we restructured the teams for which divisions was going to which therapies, what is the focus. That is what we took over in Q4. That, I think with the management change and all that restructuring, that is what led to a higher attrition in the field force. And as you know, acute is largely a short-term treatment, right? So if you have a gap in the field force, it does lead to a much higher sales drop than what you will see in a normal chronic business. For coming to the question on the field force, about 40% of the field force is in Zuventus for us.
Oh, okay. And what percentage of this 40% would have seen, restructuring or, change in MRs?
So I think we structured the whole. So difficult for number, but the attrition would have been, so normally if you look at it, attrition is about 20 to 30%. The quarter we had a much higher attrition out there.
Oh, but having said that,
it's not just the attrition, it's also restructuring of a couple of the divisions and the products. So I think it's not just the attrition aspect, it's also, being repurposed. So there's a little bit of disruption related to that happens normally as part of any such exercise. So I think all in all, what we're trying to highlight is that was something carried out towards the end of Q3 and in Q4, but is starting to pay us dividends in the sense that for April, as the CEO mentioned, we are right on target in terms of our own internal expectations for Zuventus. So we're very happy with the progress that we're seeing, particularly over the last 45 to 60 days.
All right. Just if you can call out what is our MR strength as of today?
2,004.
Yeah. So close to 4,000.
Close to 4,000.
Okay. The reason why I asked these questions is that at least with some of your peers, what we've seen is that on the acute side, when we see such restructuring of field force, it does take a while for the productivity to show up, because as you highlighted, this is short-term treatment. A lot of it is based on your relationship with doctors, etc. So that is the reason why I was trying to check. But it's good to know that you're mentioning that you're already seeing improvement in the month of April. So we basically should not expect this to sustain, right, in terms of impact going into the next quarter.
Yeah. So
we'll be back on track. And again, the other thing that I would like to say, that as Zuventus is concerned, over a period of time, we have built some very strong brands, so that should also take us through. Though we are in acute, but at the same time, some very strong brands. So I think that's how Vic was mentioning some time back, right from April onwards. We are on track, and every reason to believe that things will get better by the day.
All right. And second question, just on our employee expenses, this year we've probably grown at about 7-odd%. Should we assume this run rate to continue?
Yeah, we expect it to be around 10%.
Okay.
Next year.
Understood. I'll get back in the queue.
Thank you. We will take the next question from the line of Dinesh Pathak from White Oak Capital. Please go ahead.
Yeah, thank you. So just carrying forward on domestic growth. So for April, can you confirm, with Zuventus, the growth is in line with the market, or it is still below market growth, including Zuventus, in the month of April?
So, Dinesh, I don't think we'll comment on monthly growth and all, but as the CEO mentioned, right, I think versus what we had targeted out, we are fully on track for that. I think once we have a quarter, that's when we talk about the full year, the quarter growth.
Okay. And Q4, did you say that ex of Zuventus, the growth was high single digit? Did I hear that right, or something like that?
I think what we said is ex of Zuventus, for the full year, we would have been that high single digits growth.
The full year. And in Q4?
Q4 would have been about that 7-8%.
7-8%. All right. Okay. Thank you.
Thank you. We will take the next question from the line of Bino from Elara Capital. Please go ahead.
Hi, good afternoon. Just a quick question. You had recently licensed these nephro brands from Roche. Could you give a sense of what is the annual revenue run rate for those brands, and also what sort of upfront payment have you made?
So, there's no upfront payment that we have made for this, right? I think similar to all the other in-licensing we have done, there is no upfront payment out here. The portfolio is smaller, so only 2-3 brands, so it will be less than 50 CR annualized.
Understood. And
what really happens that we have a reasonably strong presence in nephrology. We ourselves are a strong position, so it should help Roche, it should help us.
Got it. And a quick question on your guidance of low to mid-teen growth. What sort of currency assumptions have you made? Does that include the benefit of depreciation of INR?
So I think the currency assumption what you're building is a average currency of 92 USD INR.
92 USD INR. Okay.
Yeah.
Got it. Thank you.
Thank you. We will take the next question from the line of Siddharth Meghandi from CWC. Please go ahead.
Well, thanks for taking my question. You had mentioned about certain AI initiatives that are beginning to show results. If you could provide some color on that, that's question one. Second is in terms of market share in your covered markets, how did that pan out in Q4 and in the full year? And the third is in the semaglutide part that you're talking about, right? How are you seeing catch up post the post you taking down the pricing in the month of April? Given the launch of generics, are you seeing your market share claw back? Yeah, those are the three questions.
Okay. Yeah. So let me start on the AI front, and I can have my colleagues join in. I think the AI initiative, it's very early days, and obviously AI landscape keeps changing by the day. But what we're trying to do is really champion it across the company. So in places like R&D and manufacturing, we are seeing definite benefits in terms of some of the speed of research and development of some of the products in the pipeline that we're working on. As well as in manufacturing, looking at how to obviously get better efficiencies or throughputs using AI to study our own, batches being produced, et cetera. Then across the organization, I think whether you talk of support functions like legal, HR, finance, I think we are starting to adopt AI in different ways and means to be able to make our workforce a lot more productive. Even on the marketing side, whether it's, analysis of sales force effectiveness and related, sales and marketing initiatives like, graphics design or brand plans, et cetera. These are all areas where, we're seeing some adoption of AI bearing some fruit. But we're very excited because I think the real benefits of that will accrue over the next 2 or 3 years as we become more and more well-versed in using it more holistically across the organization. I think to your second question around semaglutide, I'll let my colleagues also answer. But certainly, we wanted to be aggressive in terms of the post-generic entry, in terms of offering a very robust price point while still offering the innovator brand. And so we are starting to see some green shoots of that as well. I will pause and let Piyush or Satish comment on semaglutide and as well as the last question that you had. Thank you.
Samit, would you like to talk about semaglutide? Samit, go ahead. Yeah. So that's something, that is very close to your heart.
Sure. No, I mean, Pavitra, there's obviously a lot going for that brand. A, it's an innovative brand. B, it's an rDNA biologic versus the synthetic generics that have entered the market. Now with this price reduction, I think we have a real sweet spot in terms of the pricing vis-a-vis the generics. And of course, across specialties, there's, close to 1,000 sales reps that are actively promoting this product. So we believe that, all this should get us very good traction over the short to medium term as well.
The other thing I would like to add, only some time back, we got also permission for MASH. That's one thing that is happening, newer indications. Then in addition to that, SEC has cleared Samit, so it should be coming any time. In addition to that, what really happens that in the price war that is going on with so many generics in the market, with absolutely correct pricing strategy, thanks to know knowledge and reach and penetration, and having got some head start, because we started promoting the product from December onwards. So I think, going forward, I'm quite optimistic about, Povista. We should do well on the back of, the clinical data that we have. As Novo is concerned, we have access to 40 clinical trials that they have done all over the world. As Samit rightly alluded to, ours is rDNA, rest of the products are synthetic. So I think, on the back of, say, science and technology that we'll be talking, we'll distinguish ourselves, from the competition, and let's see how it plays out. But at the same time, as I'm talking to you, I'm quite optimistic. And third one, which is the Piyush?
That you covered market share. Right?
So that's you.
Yeah, I think overall, given the Zuventus impact that we had in Q4, our market share would have probably been flattish for the year.
Thank you. Thanks for the detailed responses. Thanks.
Thank you. We will take the next question from the line of Ankush Mahajan from Sanctum Wealth. Please go ahead.
Sir, thanks for the opportunity. My question is related to the India business. So if we see there are different parts in the India business, like base businesses there, then semaglutide and Sanofi business. So despite all these parts, our growth is just 5%. So I just try to understand what kind of a growth we have seen in base business than other businesses also. And what we are, as compared to the previous questions, we are realizing that the peers, those have an acute portfolio are facing such problems, like the restructuring of the team and all. So the growth is almost delayed for a few quarters. So would you throw some more light on that part?
So I think as you mentioned, right, so yeah, so the restructuring had an impact on Q4. What we are seeing, at least in the last 45 days, 40 or 35 days of the year, the revival and the business performing as per plan. So I think for us, we don't expect the impact to last a very long time for us.
No, but as I explained, some time back, I'm sure you must have listened, that we have problem only in Zuventus. As far as other businesses are concerned, like IB, where we are strong in gynae, cardiac, and metabolic, so that continues to perform as per our expectations. Then our onco and nephrology also is performing as per our expectations. And because of change in management and restructuring that Vic so eloquently explained, we had a bit of a setback, as far as Zuventus is concerned. But as I told, in my opening remarks, right from April onwards, we are on track. So nothing to worry really.
I would like to just clarify one point. The acquisition of the minority stake and the departure of Mr. Guha happened in the month of October. So this is not a recent departure, and therefore we're concerned about the lagging effect of that over the next 2-3 quarters. What we're trying to highlight is some of this started already in, let's say, end of our Q3, carried into predominantly Q4, where we took the efforts over the prior 3 months in Q4 to have a lot of that restructuring take place. And now we're seeing the green shoots of that. So from our perspective, we think that Zuventus is more or less tracking back on track, starting in Q1 itself, as opposed to being concerned that this is going to be a, let's say, 2-3 additional quarters lag. We're already about 4 or 5 months into that entire process.
My assessment is that we are almost lost 80 to 90 crore of the business in the first quarter. Sorry, in the last quarter, Q4 quarter, from the Juventus side. So, but behalf of that, we have grown in the semaglutide side and others also. So this growth should be on the higher side.
Piyush, did you follow the question?
So I think for which the semaglutide side is still ramping up, right? So it's not a big driver or a big contributor to growth at this point. As you know, I think what we talked about even last time, the initial few months, it was more about market shaping and building the business and all. And then March onwards, there was anticipation of generics coming in, so there is a price cut. So Q4, we didn't have that much of a semaglutide delta in there, in the business out there. I think what is highlighting is X of Zuventus, if you look at it, our domestic business is growing at that high single-digit, low double-digit rate on an organic basis itself.
Thank you, sir. Thank you very much.
Thank you. We will take the next question from the line of Poonam Parekh from BOB Capital. Please go ahead.
Thank you for the opportunity. My first question is on the domestic side. If you can quantify the contribution of these in-licensing products to the domestic business.
So the in-licensing make up for the domestic about 15% of our sales.
Okay. And are we still scouting, or are we still interested in doing more such in-licensing deals in the near term?
I'll take that question.
Yeah.
So ma'am, we are concerned, the entire focus will be on organic growth, build, our own brands and take them to the next level. Also launch the products from our R&D. But at the same time, suppose if something comes in licensing, we are obviously pretty open. Because let me tell you, getting the cardio portfolio from Sanofi has obviously, given a fillip to our products as well. That has worked out well. And as far as metabolics are concerned, we hardly had any presence before we got, metabolics portfolio as in Amaryl and Cetapin, from Sanofi. And what really happened on the back of this portfolio, my own products, with good GC have also started doing well. So I think, while the emphasis will be obviously on organic growth and focusing on our big brands becoming bigger, but at the same time, as I mentioned, in the early part of my address, in-licensing will continue to be part of our strategy going forward, wherever it is going to be accretive and going to add value, to our current portfolio.
Sure. And on this Poviztra brand, how should we look at it? I mean, despite the competition, but then we had a price cut and we had some encouraging results out of it. So do we see it becoming a meaningful contributor in the next couple of years to the domestic sales?
I think so, because what really happens, thanks to Novo Nordisk, the pricing, is very competitive. And as the market, crowds and most of the people will be talking about, say, price war is going to happen in times to come. But as far as we are concerned, we'll talk about the merit of the product, which is the RDMA product, not synthetic, backed up by a lot of clinical data. So we'll be differentiating ourselves on the back of science, we'll be talking to the doctor. To that extent, as I'm talking to every reason to believe, that this product should do well going forward for us. And yeah, go ahead.
I was just going to add that as you already mentioned, as the indications of use continue to widen and more specialists become comfortable writing the brand, that's where we think we will continue to gain momentum with this brand as well.
Sure. My second question is on the R&D pipeline towards ADC. So if you can just explain what part of the ADC are we present into, and when do we see this getting commercialized? How long is it, for the commercialization today, please?
Sure. So there are two parts to the ADC program. One will be a biosimilar ADC, and the other will, have some element of innovation in it, especially the linker around which we have our own IP. So the linker and payloads will be in-house. The conjugation will be done in-house. For the MAB, since, it's a crowded market with available drug substance, we are partnering with, a company to work on the MAB. So in that context, the biosimilar ADC should have a shorter approval pathway, and the innovative ADC, of course, will be slightly longer, but we are seeing some encouraging results in terms of identifying some potential lead candidates.
Okay, so by when do we expect commercializing these products? Is it in the near couple of years' time?
So the biosimilar ADC, the only reason I'm not giving out a very specific timeline is because the regulatory landscape in India itself is evolving. Many countries globally have done away with phase 3 trials, which are typically the most expensive, studies which have the longest timeline as well. So if, there is some regulatory pathway that is similar to these countries, then it could, take away a significant portion of the development timeline. So, there's no point in trying to guess where and at what time these paths will coincide, but it could make a significant difference in the approval timelines with and without a phase 3. So it may not be accurate to give out a timeline, but obviously the biosimilar will be earlier than the novel one.
Okay. And lastly, on the capex front, if you can just give us the capex expected for FY27.
Yeah. So
I think there we can give the guide around that 400 crores rough number. I think we'll broadly be in that range of 400, 425-ish crores.
Sure. Okay. And thank you. Thanks a lot. Yeah.
Thank you. We will take the next question from the line of